All right, what's going on, everyone? So, as you can see, Bitcoin right now just broke above the demand curve, as you can see, and this is a good time to buy, but at the same time, it's better to be smarter and wait for the selling to come in, because what this shows right here, I give you an example. What this shows, you see all these high lows, high and lows, high and lows. You see all of this. What this shows you is that, like, let's say this area right here. What this shows you is there's not enough there's not enough buying, people buying to push the price higher. So as you can see, every time there's buying, like right here, every time there's buying, uh, it's not enough to push the price higher than here, than this area right now. I'm trying to put it simple because I'm not really good at explaining things, but I'm really trying to help people out, you know. And what you need to wait on this situation is wait for a reversal. And this is a reversal happening recently. You can see all this momentum, all this green candle right here. That means there's a lot of buying coming in. So the smartest thing to do right now, I would say, is wait for the selling to come in. You see this selling, all this red. You need to wait for this to happen here in order to confirm that the break above the demand curve is confirmed. Because it could be a fake out. Meaning that a fake out could be basically it goes up and then it comes right down below the demand curve, meaning this red line. And then after that you just set up another trend line like the previous one right here. On the left side you can see the trend line. It comes down, it bounces off the trend line, it goes up, it bounces off the trend line, it keeps going up. What this represents on the left side is that, let me put it simple. There's 1,000 buyers coming in, and there's 500 sellers coming in. What do you think is going to happen? The price will be pushed up because there's more buyers than sellers, and buyers are the ones who push the price up. Buyers who are willing to take the risk to buy at a higher price because they have confidence, they believe on the security or the cryptocurrency, meaning Bitcoin right now. This is Bitcoin, by the way. And on the right side, what you see is the opposite. You see 1,000 sellers and 500 buyers, and so every time there's sellers, there's 1,000 sellers coming in, and then 500 buyers coming in. Obviously, it's 500 buyers, so it's not enough to it's not enough quantity to push the price up. There's obviously more sellers than buyers, and this is market sentiment, obviously. So you can basically see market sentiment, meaning that people are now willing to buy enough quantities. Like enough quantities are not demanded for the cryptocurrency right now for the price to be pushed up. But on the right side, you can see that a lot of buying comes in. Why? Because all of a sudden people are willing to pay for the price. It could be anything. I'm a trader, so I don't read the news. I don't care about fundamentals, none of this. But I just care about buying and selling. I just care about what's going on in the markets. What the market is reacting to. And these guys, the market right now is reacting to a lot of confidence, in the cryptocurrency. Meaning a lot of people are believing in the cryptocurrency, and so they're buying. They're buying higher quantities than before. So that's why this represents that's why it shows the breaks above the demand curve, which is the red line here. Now, what you want to do is wait for sellers to come in. You wait for the sellers to come in, and if the sellers come in and the price still holds above the demand curve, that means that buyers still have the control over the market, and that there's not enough sellers to push the price back down into the demand curve. So buyers have control, and that's when you want to be in. You want to be in the trade when buyers still have control over the cryptocurrency. Now, how do you get out? Well, the way you get out is this one. If you're a trader like me, and the smartest way to get out, how I do it, giving you some tips, is you wait for the break. After the buyers come in here on this side, you wait for the sellers, and if it holds above, you um, you place the trend line. You have to use a software, a website like TradingView to place this trend line, so it tells you about the price levels, and you can see the price levels clearly. It just helps you see the price levels clearly. And what you said, when you sell this, when you see this here, that's when you sell. You see this break below the trend line, the supply trend. That's when you sell immediately, because what happens after that, you can clearly see what happens. It's all selling, because what this represents is that up in this level, buyers all of a sudden are not demanding enough quantities for the cryptocurrency to be pushed up. So that's my take on this. Hope you learned something, and just trying to give some tips to people out there. Do your research, do your own research. I'm only telling you this to give you some tips. This is just for educational purpose. Trying to manage my, kind of like a business. You have to treat this like as a business. Never be worried if you lose money or make money. It's all the same thing. How does the business works? A business makes money and a business loses money. It's like I was explaining to my cousin right now. I was telling him, let's say you have a business where you buy motorcycles and you sell them for a higher value. Let's say you buy a motorcycle for $15,000, and then the value, it loses its value, so then you have to sell for $12,000. You selling at a lower price, obviously, so you're losing money. But if you treat it as a business, you don't need to worry about it, because then you can look for more opportunities, other opportunities. Like you find another motorcycle that's running for $10,000 and you see good value in it, it's good conditions, and it has a high value in the markets, but you find it for $10,000, and the value goes up to $15,000, $20,000. You then sell, and you're making money. So you're losing money and you're making money. But you just gotta make sure that, at least in trading, you gotta make sure to set a max risk. If you say, I'm gonna invest $500, no, I'm gonna invest $1,000. You do this. You always choose 50% of your account. Never trade with 100% of your account, and so you have money left to risk manage, to hedge your losses. Meaning, if there's more opportunities come in, you have some money left. You have some cash to use to take advantage of those opportunities. So you then trade with $500, and out of those $500, you say, how much money am I willing to lose on each trade that I make? You then say, okay, I'm not going to lose more than $30 to $50 on each trade. So that's what you do. So every time you lose, you see your portfolio or the trade losing $50, you cut your losses. Because you have to follow your plan. If that's a plan, if you set the plan to say the business is not going to lose more than $50 a trade, that's it. You have to cut it off. Okay, always follow your plan, and that's it. That's all I got for today. Martial management, and peace out. Still recording.